Welcome to the Full Tracy Money Audio Commentary. This is Owen Tracy recording, and it is 3:41 p.m. that is Central Time. Today is July 7th, and plenty to think about in here today. On the one hand, over the weekend, we had lots of news. So the announcement from OPEC and Russia last night saying that they were going to increase supply by over 500,000 barrels. That initially had a negative impact on oil prices, and then oil finished up on the day. In here today, it was up about $1 in both Brent crude and West Texas Intermediate. Then we had the passage of the big beautiful bill and the signing ceremony on Friday, and it would have been reasonable to expect that with such a large fiscal stimulus, we should have positive impacts from the stock market. That was not the case. The Dow Jones was down about 1%, the Nasdaq down a little less than 1%. Then, because we had a bigger flurry of activity on the tariff front, where the promise of significant tariffs on both Japan and South Korea, which are allies of the USA. That's obviously a cause of concern. It put some downward pressure on the yen, and it was a broadly positive day across the board for the dollar. So we've certainly seen a phenomena where when we have tariff rhetoric escalating, then that has tended to put upward pressure on the US dollar. Well, with a stronger dollar, it would have been rational to think that maybe some of the bullish, I guess the bullishness around gold would have ebbed somewhat. That did not occur. In fact, gold dropped in early trading and finished out the day in pretty much even territory. And then silver was down over 50 cents for a lot of the day, and then that also trimmed its decline. It was down about 12 cents. Where we didn't really see a lot of trimming of the declines in copper, and the COMEX contract came right back to test the even $5 level. Now, when we flip over and look at some of the commodities, well, corn was down 16, soybeans down 28. So we're still in an environment where they haven't quite yet been able to reach liftoff potential. Where we continue to see strength is in both feeder cattle and live cattle, and there is a shortage of available inventory there. And a lot of that has to do with interest rates, and now we have the additional